Good morning. Let's look at a trade in gold this morning. First, I'll look at the daily chart. As we all know, gold has been on an upward tear for quite a while. There's been a bit of a retracement, but it has yet to break the 50-day moving average mark. That being said, the most recent trend is also bearish. Yesterday, price did break through the previous day's low, although it did not close below that level. This morning, price continued its downward trend. So be mindful of any long trades you want to take. That being said, the longer term trend is still bullish, provided price remains above the 50-day moving average. But be cautious, as there's clearly a shorter term bearish trend. This morning, I went through my charts. I marked the significant levels. This blue shaded area right here is a 1 hour fair value gap, which was formed yesterday. As you know, I like to trade off the fair value gaps, so have price manipulated towards that level, bounce off it, and then take a reversal trade on the upside in this particular case. So let's see how price progresses. Let me change it to 3 times the speed. So yeah, let's see how price moved this morning. Let me pause it right there. So price did shift downwards, so clearly there was price manipulation to the downside towards the fair value gap. As you can see, it had a quick bounce, but then it oscillated a bit around that level. Now if you look at the EMA cloud, there is clearly downward trend, so it's very bearish. That being said, let's look to see if there's going to be any bounce back from this FVG. So we pause it again. Again, price just seems to be oscillating here. On the way down, price did create a bearish fair value gap. I've marked that bearish fair value gap. You can see right here in this box. What I'm going to look for right now, should there be a reversal, then I am going to look for price to close above this bearish fair value gap. If price does proceed that direction, and if price does close above it, that for me is an indication that there is a good chance it will reverse to the upside. So we may be able to take a long trade towards this liquidity level, which I also marked as price progressed. This line here is the anchored VWAP, so also be mindful about that, because sometimes price does tend to rebound off that. But one thing I will be looking for it to do is to take out this liquidity level. Also, there is the Asia high, which is also a very strong level of liquidity, which I'm pretty sure that price will be looking to navigate towards that level as well. So let's see what price does moving forward. Okay, you can pause it right there. You can see a very strong move downwards, and all the sellers were basically completely eviscerated. So this strong downward motion was rejected, resulting in a very big rejection candle, leaving behind bullish hammer candle. So now I'm starting to get real strong sense of price potentially reversing and then retracing to the upside. Be mindful again, because a few candles later we see also price trying to move up, being rejected. It didn't close above the fair value gap, so the bearish fair value gap, and for that reason I did not enter a trade yet. I needed to close above this level in order to get the confidence that price will reverse. And that's where that happened. So on this particular candle, the 3:30 a.m., so this is New York time, 3:30 a.m., price did push through the fair value gap. It closed above it. So on the next candle, as it opened, I entered my position. My stop loss was placed below the fair value gap, so very close to this point of control area. When I also applied a 2-to-1 risk reward ratio on this particular trade. I'm obviously targeting this liquidity level. However, I prefer not to trade above 2-to-1 risk reward level. That's purely out of experience. Price generally tends to come very close to my level before retracing back. So playing it safe, I'm happy to take my profits here. That would be a good trade in my books. See what price actually ends up doing then. So there you go. It took a little heat here, so price tried to retrace back downwards, but you see the EMA cloud starting to trend upwards, here to trend upwards. Price tried to push down, respected the EMA cloud, and then made a very couple of strong moves to the upside. There was one final push here, just shy of my take profit level. Unfortunately, price did not reach my take profit levels and started to reverse. And one thing I also want to mention is you will notice that the point of control for the day moved from below here, from below this level where my stop loss was, to this level. So what I'm going to try to see right now is if price does push below this point of control and closes below it, then yes, that would be for me a reason to exit the trade, simply because I can kind of infer from that it may not reach my take profit level. And yeah, take profits when you can. That's a bit about trade management, risk management, and just make sure that you book profits where you can. At the end of the day, it ended up being a 1 to 1.5 risk reward. Not the greatest, but